Truth in advertising and infinite banking. You want to know why I do this? My motivation? It's not money. Surprise. Yeah, actually, I lose money every time I help a client with a tax-free cash growth warehouse account. Now, let me be clear about this. Insurance is a commission business, just like real estate and a whole lot of other sales jobs. So when I help someone get set up with one of these tax-free cash growth warehouse accounts, I do get paid a commission by the company that I place the account with. But when I design an account for the infinite banking tax-free cash growth warehouse strategy, I lose roughly 70% of the commission I would have made if I did not put in the additional work that it takes to design and construct a life insurance policy as a living, infinite banking, tax-free cash growth warehouse account. So why do I do this? And how do I lose money doing it? Why? Well, first of all, because I and my wife, Amanda, know from personal experience that this strategy is the most powerful and helpful finance strategy there is. You see, as soon as I learned about it, we began to put it into practice. And we have benefited from it more, much more than any other financial advice we have collectively ever received. And here's the thing. I feel it is my responsibility to share this information and help others to take advantage of it. And there are way too few people helping people with this. So how do I lose money when I help others to benefit with this strategy? And this is where many of the untruthful or downright fraudulent claims about infinite banking come into play. I'll get back to this point. But what I'm about to share with you now will expose the untruth and downright fraud that goes on in connection with infinite banking. As I said earlier, life insurance is a commission business. That is, the life insurance agents are paid on a commission basis. No sales, no commissions, no pay. And different products carry different commission schedules. There is some variance in what I'm about to reveal, depending on the specific insurance agency, but the commission levels I'm about to reveal are fairly consistent. For example, term insurance policies pay the agent about 100% of the first year's premium. So a term policy with a $500 per year premium will pay the selling agent $500 in commission. An IUL, or indexed universal life policy, will pay the agent from 90% to 150% of the first year's premium in commission. So an IUL policy with a premium of $2,000 a year will pay the selling agent a commission of from $1,800 to $3,000. A whole life insurance policy will pay the agent from 30% to 55% of the first year's premium in commission to the selling agent. These commissions are all only for the first year of the policy. In subsequent years, as the client renews their policy and pays their premiums, the agent will earn a much smaller commission for the renewal, usually about 10% or less the second year, and then smaller percentages as the years go on until by the 10th year, there are no more commissions paid. With all types of insurance, there are usually certain riders which are additional benefits that can be added onto the base policy. For example, with some term policies, you can add a return of premium rider. It costs quite a good deal. And it provides that at the end of the term of the policy, if you are still living, the amount you have paid in premium will be returned to you. You won't realize any interest on all of that money that you paid in premiums over the years, but you will get the money you paid in back. Of course, it will have less value than when you paid it in because of inflation. Now, with IUL policies, many will allow for a long-term care rider to be purchased with the policy. This also is fairly costly, and it provides for a specified amount of benefit to be paid out to the owner of the policy in the case where they require long-term hospitalization or in-home nursing care. With term and IUL policies, there are no riders that are available that will increase the face value or death benefit or cash value, as there are with whole life policies. Now, this is where the design of the policy can be such that the value and benefit to the client can be vastly improved, but to the detriment of the selling agent. Where the commission on the base policy may be as much as 55% of the first year's premium, the commission on the riders is only 2%. The available riders differ from one insurance provider to another, but I mostly use the company that has the most valuable riders for the client. And this is how I lose money when I help my clients with these accounts. Let's say that the commission for a particular client on a whole life policy with a $600,000 death benefit at 55% is $2,000. Now, when I design an infinite banking tax-free cash growth warehouse account for the same client, the base policy will be reduced to just around $200,000 in benefit. And now the commission on that will be about $650, or 75% less than the $600,000 straight whole life policy would pay. Then I'll add a rider that will increase the total death benefit back up to the $600,000 value, and the premium will be around $1,500 for the year for that rider. And at 2% commission on that, it's only $30. Then I'll add another rider that will grow the death benefit each year, and the premium for that rider will be about $500 per year and pay a commission of just $10. So now with the infinite banking tax-free cash growth warehouse design, the total commission is just $690, where the straight whole life without these riders pays a commission of $2,000. So I've lost $1,300 or 65% in commission in order to create an account that adds greater cash value and faster growth for the client. And here's what those special riders do for the client. First, we're able to provide the same or greater total face value or death benefit at a lower premium for the client. An even greater benefit to the client is that the premium for those special riders contributes to the cash value growth of the account. About 92% of the premium paid for those riders goes directly into the cash value of the account. That's significant, especially with the high compounding interest these accounts earn. Now, what is the untruth and fraud in connection with infinite banking? Untruth is perpetrated by the financial advisors who either don't know infinite banking or they just want to steer people away from it and into their own personal collection of assets under management. They like to tell people that agents who promote infinite banking are in it to collect obscenely high commissions. Well, now that you know how infinite banking accounts are properly done, you know how laughable and completely false that claim is. Other untruths and fraud are presented in the form of agents and even agency owners claiming that IUL policies are just as good as whole life for infinite banking. As I explained just a minute ago, IUL policies don't even offer the riders that are critical design elements in a proper infinite banking policy. Another thing I've seen is that some agents, when their client expresses an interest in infinite banking, they will tell them that they know all about infinite banking and they can set up their policy for it when they really don't know infinite banking at all and don't have the first clue as to how to design a policy properly for it. It's called integrity. And I've noticed a whole lot of lacking of integrity in all kinds of advertising these days. Scammers seem to be everywhere. So, people, beware. Please post your questions and comments here and subscribe to this channel. We have well over 100 videos answering questions and education about infinite banking, the tax-free cash growth warehouse strategy, and financial literacy in general. So take advantage of the information here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.